After digesting the Tesla deliveries beat and considering where they are headed this year, I think it's pretty probable Tesla gains 50 to 100% over the next 12 months. I have a big smile on my face with this bag for this video because I really feel this tweet here is true. And Tesla has, I think, a very good chance of gaining 50 to 100% over the next 12 months. And this tweet got a lot of attention, so I thought I would break down more of the reasoning behind it. If you get value out of this video, make sure you hit that subscribe button down below. Hit the thumbs up, the like button while you're at it. Really appreciate that. You can also find me on Twitter at PaperBagInvest. So first off, if we're trying to estimate what Tesla is going to be worth 12 months from now, we really have to try and estimate how many vehicles are they going to deliver in the next 12 months. I like this tweet from First Principal Investor, his account, and I'm going to just run through his numbers. And I've seen lots of different predictions, lots of different estimates for this year coming out. I'm going to run through his numbers here. So he's saying Fremont, Shanghai, Berlin, and Texas has broken down. Fremont S and X doing about 70 to 90,000, and 3 and Y doing about 480 to 520,000 vehicles for the year. So we're going to look at each one. He gives a little bit of detail here. Fremont, he says in the Q3 earnings call, Zach guided that the Fremont as a whole has 50% upside from its 430,000 trailing 12-month production, Q3 equivalent to 645,000 annual capacity. So he's saying they produced about 115,000 3 and Ys in Q4. Waiting Shanghai numbers to confirm they can possibly do at least 120,000 quarterly rate. And then he talks also about some of the battery and paint shop bottlenecks. So he's thinking they could do about 480 at the low end, up to 520,000, and then 70 to 90,000 S and X produced. Shanghai, he's looking at 980 to 1,080,000. His reading again around Shanghai, he says they announced a capacity expansion project recently, which they increased production rate up to 1.5 million units, and the project will be completed by April. He's projecting an increase of 200,000 to 300,000 units from his 780,000 December annual run rate. So he's taking that 780,000 kind of December mega run rate that Shanghai had, and then adding another 200,000 to 300,000, getting to that 980 or 1,080,000 vehicles. Again, I think both those predictions seem pretty reasonable, that those could come true. And then Berlin and Texas, he's saying Model Y, he's not including any Cybertrucks in here. He's saying 300,000 to 400,000 Model Ys out of Berlin and Texas. And his reasoning for that is that Elon has repeatedly emphasized the risks of slower than expected ramp for both factories given the novel technologies they are putting in. So he's not putting ultra optimism here. But taking Shanghai, the ramp of Shanghai as a guide, which successfully ramped up Model Y and produced 200,000 units roughly in 2021, I expect an annual production of 150 to 200,000 from each Berlin and Texas in 2022. And given, or it seems like both factories are pretty close to being close to starting production, that seems like pretty conservative or pretty possible estimate again in my judgment. So 150 to 200,000 vehicles each brings you to 300 to 400,000. You add up the low numbers, add up the high numbers, you get a sort of a bear case of 1.8 million, bull case of 2.1 million. And someone also asked about the chip constraint. And as he mentions here, chip shortage will be better in 2022 than 2021, which I agree with. It should get better over time. But also he says we're at a run rate of about 1.3 million. So if you're just thinking, some people are thinking maybe we're around 1.5 million for the year. That does seem too conservative or too low and too bearish when you think you're adding 2 new factories, and just given the level of execution that Tesla has shown. You think rather than 1.5 million, they could easily be like at a 1.8 million kind of range. Now, here's a quick napkin math on this and reasoning, is that if you take 1.8 million deliveries, which we're suggesting, and say an average selling price of $50,000 per vehicle, that's $90 billion in revenue, and they're at about a 30% gross margin, which continues to improve. They also keep raising the prices of their vehicles, so this could actually be higher than 30%, but we assume 30% gross margin on $90 billion in revenue. It gets you to about $27 billion in gross profit. And their operating expenses have been fairly level at around, recently around $1.6 billion per quarter. So we're just going to multiply that by 4 for $6.4 billion per year for the year of 2022. And take the $27 billion minus 6.4 gets you about just over 20.6, around 20.6 billion in net profit. Now, if we say we apply a trailing PE to that, now we haven't taken taxes or anything out of that, this operating profit PE of 100 gets you to just over $2 trillion market cap, about a 90% upside from where we are today. So that's why I think doing 50 to 100% is very reasonable, definitely possible. And some people might say, well, is a PE of 100 too generous? I really don't think it's 100 given, if they do this kind of rate, it's basically going from 900,000 this year to, 1.8 million next year. It's 100% year-over-year growth, and probably going to have continued growth, 50%, maybe higher for the next several years. Then giving them a PE, a trailing PE of somewhere in the 100 range is, I think, very, very reasonable, maybe even conservative. Because right now, Tesla has a trailing PE of 353. So to give somewhere in the ballpark of 100, I really don't think, again, is unreasonable. And the other question people might have is they might say, well, will demand continue? Will it continue? Or if Tesla reaches 1.8 million vehicles delivered, this next year, well, at some point they reach kind of the threshold where supply is meeting demand, and there's everyone who wants a Tesla is going to have a Tesla, and they're kind of reach a steady state. I really, really think that's unlikely. Here's an interesting clip I want to play from a recent interview between Dave Lee and Matt Smith.
I think back a lot to a tweet Brett Winton from ARK Invest put out, I think it was 2 or 3 years ago, when Bloomberg did that, big 5,000 Model 3 owner customer satisfaction survey, essentially. And Brett ran some numbers on that and basically found that the Model 3 had a net promoter score. I forget the exact number, but it was something like a 97, which is just outrageous, off the charts high.
Yeah.
Higher than significantly higher than the iPhone back in 2007.
So it's really incredible that Tesla has a net promoter score. At least the Model 3 in its early days was something like a 97, just like an incredible net promoter score. And this is sort of my experience with Tesla and what I see how Tesla is really, in my mind, every Tesla that sells kind of sells at least 2 more Teslas. Everyone that seems to buy a Tesla or have a Tesla or know a Tesla or know someone who has a Tesla, it continually multiplies because the product is so excellent, because it's such an incredible different driving experience that people love the product so much that it continually sells itself. So if anything, I think demand will probably increase even more than the amount of production is increasing over the next year. Then the other thing I've seen people wonder is, okay, what if 1.8 million is too high? I really don't think it is. It could even be higher than that. But I've seen other estimates suggesting more like 1.5 million deliveries this year. So if we say they only do 1.5 million deliveries, it's more conservative, but they sell them at $50,000 a piece. It's still $75 billion in revenue on a 30% gross margin. 75 billion is 22.5 billion gross profit. You say the same operating expenses roughly in there. This could be a little bit higher again, but we'll say 6.4 billion. Subtract that, you get a net profit or an operating profit of just over 16 billion. Apply a PE of 100 and you have $1.61 trillion market cap, a 50% upside from where we are today. So again, I think 50 to 100% gain, potentially even more. There's scenarios where you're being way too conservative here, where you're thinking like full self-driving could kick in, maybe the first robo-taxi ride comes in, plays like that, which could drive this way higher than the 50 or 100%. But I think 50 to 100% is very, very likely. So let me know what you guys think. I'd love to hear from your thoughts on where Tesla will be in the next 12 months. Let us know in the comments down below. And thank you so much for watching. And remember, it's in the bag.